What's up, YouTubers? It's me, Johnny. It's Thanksgiving. I just want to wish the viewers a happy Thanksgiving wherever you are in the world. Is it today or is it tomorrow? Anyways, it's like Steve likes to say. Well, anyways, forget about what he still likes to say. But anyways, when you're on vacation too long, you forget what day it is, and at least the holidays in the States. Today I want to talk about what I think is it's a trend already in place, and it's kind of possibly new, but I think it's going to go on for a while, and that's the trend of collapsing currencies in the developing world. No, okay, just to be clear, I don't think the US dollar or the euro or the pound sterling, the Swiss franc, etc., will crash and burn. But what I do see with those currencies and a lot of the first world countries currencies, like in the next 10, 15 years, I think those currencies are going to go away. I mean, I'm a bit of a Michael Saylor fan in that I think as things unravel around the world, more and more countries are just going to use US dollar stable coins that you can use online. Now, I realize and recognize that sounds crazy, but as the whole world gets iPhones and Android phones, like this, and they get an app and they can buy and sell Bitcoin and stable coins, more and more people are going to put their savings into probably the US dollar and some version of a stable coin. Now, the reason I mention that is because that's why I think the US government's going to regulate all this stuff and not really make it illegal like a lot of people think. I think now it's really too late to turn this, off and get rid of it. We'll see. I mean, there still could be some kind of economic crisis or political crisis where that happens, but just today or yesterday, India said they're going to ban Bitcoin or cryptocurrencies in general. I don't know if that's what they're actually going to do or what's going on with that, but I don't see that being very easily enforced. Which brings me to, let's see now, Turkey. If you haven't been watching the news, Turkey just had another 10 or 15% down day. I mean, their national currency. Their currency now, I think, is at 11 or 13 to $1. The reason I mention that is because over the last year or two, the currency in Lebanon has just collapsed in less than 2 years. And now it appears to me this is going to happen in Turkey. I hope it doesn't, and I don't want it to happen. But in the past, when the Turkish lira lost 50 or 60%, I think when it went from 3 to 6 to 7 or something like that, it was my understanding that Turkey made it hard or difficult or illegal to buy gold so citizens couldn't protect themselves. And then later on, what the government did is they decreed banks wouldn't let you use credit cards or ATM cards to buy Bitcoin. Now, when that happened, something happened where entrepreneurs came in and started or made multiple apps that were offshore. By that, I mean offshore of Turkey, that would accept Turkish ATM cards and credit cards to buy Bitcoin. So every time the governments of the world put up roadblocks to these things, within days, weeks, months, entrepreneurs come in and fill in the gap, and it's going to be very, very difficult to make this trend go away. So my long-term view is a lot of currencies are going to fall by the wayside. They may still be there, but people are going to use stable coins, and they will probably use US dollar stable coins and maybe euro stable coins and maybe yen and Chinese yuan stable coins is what I'm thinking. And a lot of other currencies are just going to fall by the wayside, if not completely. Now, my idea for this video is basically one of the big trends in Latin America is currencies are not collapsing, but they're going down little by little. As inflation is heated up, excuse me, as inflation's heated up, some of the Latin American countries have raised interest rates. Brazil, Mexico being two that I can think of. And just to tie this back to Turkey, Turkey now is lowering their rates, i.e. causing their currency to fall down or collapse at least 10 or 15% in one trading day. And I don't know, what it was before, but it used to be 3 to 1. Now it's 11 to 13 to 1. I say 11 to 13 because if you go online, it says 13 to 1. But if you go to platforms where you want to send currency to Turkey, a friend of mine needs to send some dollars to Turkey, and they give you 11 and not 13. So and they say it's free, but that's the spread, and you're going to lose a lot when you do it that way. Anyways, getting off the subject, but it kind of surprised me because I wasn't paying attention. But so I started looking at other Latin countries, and right now the U.S. Mexican peso rate is 21.59, and it's just steadily declining. And their version of their Fed, AMLO put in a lady, I forget her name, but she is, I guess, considered dovish, and the currency is starting to weaken. And here's what I expect to happen. I expect a lot of countries, not all, but many, to copy Turkey, and they're going to start lowering rates, maybe even Brazil. I bring up Brazil because they've been raising rates, and so has Mexico, but at a certain point, the economy starts to slow down, like what's happening in Brazil and Mexico right now. I don't know if the numbers came out today or yesterday or last week, but the economic numbers for their economy is slowing down quite a bit. So I suspect if you're a retiree or you're just traveling in Latin America, or you live there, if you have a U.S. or Euro-based income or pound sterling or whatever, you're about to get a lower cost of living. Now, keep in mind when I say that prices are fluctuating in local currency, and if prices go up faster than, the devaluations, then the cost of living could go up. But right now, from what I'm seeing, from the people I know, a couple of people in Brazil, they tell me their cost of living has gone down 20% because they have dollars, or their income's in dollars. So I'm just making that point. Now I think, it's like just 3 months ago, the Mexican peso was at 19 and then 20 to 1. Now we're at 21 and a half. I suspect we're going up to 24, 26. Now I'm not telling you to speculate on the pound, or pardon me, on the peso or trade it. I'm just saying that's where I think is going. And Brazil is, let me check Brazil. Hold on. It's saying it's at 5.6. So that's kind of interesting because I thought it was a little bit lower. So your dollars are going a little bit further. And I expect that trend to continue because I don't really expect, let's say in the next 6 months, I don't expect inflation to go down. In fact, I expect over the world it's going to go up, maybe not a lot, but it's going to continue up. In fact, I'm going to make an outlandish claim. I think the U.S. inflation is probably going to top out at 9 or 10%. And then reverse back down to 4 or 5%. Now, I'm not saying it's going back to 2%. I'm just saying it's going to decline back to 4 or 5%. So it'll rip up, come back down, and then we'll have an economic crisis, I suspect. And then we'll have another bailout. The Fed will intervene in the markets and they'll bail out some people, just not most people. Anyways, so that will cause the currency that will cause probably inflation to slowly rise over time back up to 10%. And if that doesn't happen, look out, then we'll probably have a big depression. But I suspect the EU, the Fed, whoever's in charge in Great Britain, they'll just keep printing money. And despite them saying they're not going to, they're going to do that anyways. But we'll have to wait and see. But that's what I expect. So inflation is going to keep inching up, and then it's probably going to decline, not back down. I don't see it going back down to 2%. Maybe 3%, but I doubt it. Probably 4%, 5%, and then ripping up to 5, 6, 7%. And I see these trends happening all over Latin America. So like where I see bargains right now, and some of these bargains are related to COVID too. I just want to put that out there, supply and demand as far as tourists. Like just to change the subject a little bit, there was a new article, and I want to say it was either the Economist or the Financial Times, pointing out that tourism all over Latin America is collapsed, but specifically like South America, Costa Rica, parts of Central America, but Costa Rica is one of them, and places like Peru, Colombia. Now, I don't know how they measure these things. I'm just going by what they said. But apparently, according to the article, something like in Latin America and South America specifically, they were talking about 20% of the GDP comes from tourism, which I did not. Wow, that's pretty high. So until tourism picks up again, these countries are going to suffer economically, and it's very sad. And they're going to keep devaluing their currency. So people who live there, whose income's in local currency, they're going to continue to suffer. It's really going to drive migration and a lot of other trends like crime and things like that. But if you live there and your income's in dollars, you're going to, in some cases, be able to buy more. Now, having said that, that's why I say stable coins are going to become popular, because as more and more Latin Americans, like Filipinos I know, they derive their income online and in US dollars, these devaluations won't affect them as much. And then when that happens and governments can't devalue the currency as much anymore to get free stuff, we'll have to see how they react to that. But they'll probably try, some countries will probably react by making Bitcoin illegal, or trying to make stable coins and Bitcoin illegal and gold and whatever. We'll have to see how it goes. But right now I'm seeing bargains everywhere. Now I'm leading myself towards Colombia and Brazil, but even in places like Paraguay, it's a commodity country. Usually commodity currencies like Canada, New Zealand, Australia strengthen when there's a commodity boom, but that has not been the case recently. Just to make a small point, New Zealand's in the news for raising their interest rates, which kind of surprised me that they would raise their rates. I don't think Australia and New Zealand are going to raise much, because the UK, when they had the opportunity to raise, they just didn't. They declined. So we'll have to see. And in more news, President Biden he's going to reappoint Powell, which kind of came as a surprise to the market. So now people are thinking there's going to be more of a sell-off, and Powell's going to raise rates and stop or slow down the taper. I think he's going to slow it down. I don't think he's going to raise rates. And if he raises rates into a recession, that's really going to, it's really going to hurt the world economy and the U.S. economy. And then in response to that, if the Fed Chairman Powell is still in power at that time, I don't know what they're going to do, because rates are already close to zero. But whatever they end up at being, they'll put them back down to zero, and then they'll just print money like mad. They won't call it money printing; they'll call it tapering. That's another stupid thing we hear. Like, governments aren't inflating the money supply; they're just tapering. But it's the same thing. They can come up with fancy names, but they're really not fooling people, because people are seeing the value of their currencies decline everywhere, including first world countries. But one way you can somewhat get around that is if you earn income online, or you have income in dollars or euros or pounds or whatever, you can live in other countries if that suits you. For a lot of people, that won't work for them. But for some of us, you can go to Colombia, you can go to Brazil, you can go to Mexico. To me, Mexico is always affordable. But now that the currency is starting to melt down a little bit, and I suspect it's going to go to 25, 26. And if we go through the all-time highs, we could see 30. Now, we'll have to wait and see. The probabilities of that maybe are low right now, but as we go forward, they could increase, and you could get maybe a panic. We'll have to wait and see. But when we got up, I think it was 25 or 26, people who bought there and held for a long time, because it came back down to 19. I want to say it came back down to 18 at the low. But now we're back up to, like I said, 21 and 21 and a half, let's call it. And I see the peso can go to 22, 23, 24. And if there's some kind of policy error with the woman who's going to lead their bank there, it could go to 30, like in a heartbeat. I just want to tell the viewers that, because if you're in these countries and you have a lot of local currency deposits, you should really, really reflect on what's happening in Turkey, what happened in Lebanon. If you keep local deposits and then they devalue and then they freeze accounts so you can't switch back to dollars, or if you have US dollars in those countries, they freeze the dollar accounts like they did in Lebanon and you can't withdraw, and eventually they'll convert to Lebanese, well, in that case, Lebanese pounds, and then you just get screwed. If people remember, that happened in Mexico, many decades ago. But keep your dollars offshore of the countries you live in. You probably don't need that advice. You probably already know that, but just keep that in mind if you have a lot of local currency deposits. A lot of these countries are really, really suffering. Colombia tried to raise tax, and they had rioting in the streets. And I don't agree with the rioting, but I agree that raising taxes on middle class and poor people is a really dumb idea. And so the policymakers are learning, if they raise tax and they have rioting and protesting in the streets, then they're just going to keep printing money that way, because most people don't correlate those two things, money printing to rising prices. And that's what's happening. And we just saw, I don't know, yesterday or the day before, I don't follow the news that much in the States, but apparently President Biden is going to release some oil reserves. And instead of knocking the price of oil down, oil went up. Most of that oil is being bought up by either China and a few other offshore countries to take it out of the U.S. And just to be fair, this is a heavy oil. This is sour crude, heavy oil as they call it, and it costs a lot of money to refine it into products as opposed to light sweet crude or light sweet oil, like what they have in or the UK, their Brent. So countries are going to play these games and play these tricks, but as always, there's going to be unintended consequences. So one of those is going to be if you can earn your money online and in a dollar, and as the world goes towards dollar stablecoins more and more in Africa, Latin America, and Asia, you can just keep your savings in these stablecoins, which are basically, as of now, with the regulations that they are basically offshore. Now it depends if you keep your money on an exchange or your own wallet. I'm assuming my viewers keep their money on their own wallets, and in that case, it will be offshore, so they won't be able to do much about it. Now we'll have to see how regulations unfold, how that will affect investors, traders, speculators, and things like that. But it always pays to have a few offshore accounts in dollars or euros, outside your country of birth, but not necessarily in the country you live, work, and play in, or travel around in, just to have a backup, just in case things get really interesting. Anyways, I want to wish the viewers a happy Thanksgiving, no matter where in the world you are. Drop and leave a comment, like, share, subscribe, and have a great weekend. Thank you.